Hi guys, welcome back to TipRanks. My name is Annika and we love to hear what you guys think of different stocks you're looking at. And if you have any stocks you're looking at, please leave them in the comments down below. We love to hear from you. Today we're looking at the top 3 UK e-commerce shares to buy ahead of Black Friday. The online shopping frenzy in the UK has begun. Black Friday is here and hundreds of UK retailers are promoting their deals online. Consumers in the UK are expected to spend a record-breaking £9.1 billion this weekend. 15% more than in 2020 since the country was in lockdown. I don't know about you guys, but I have been shopping and looking at the Black Friday sales online. The first stock is ASOS and its ticker is ASC. ASOS is an online fashion giant. They have an entire collection of different brand ranges. They have shoes, they have accessories, they have gadgets. There is lots that ASOS has to offer. But the shares in ASOS had a slightly miserable year. The shares had declined 40% in the past year. October was particularly volatile, especially given the warning they had that higher prices might affect their profits. Their company's CEO also had a sudden departure, and their supply chain troubles caused them to defer orders from suppliers. Nevertheless, they showed a revenue of £3.9 billion and their gross profit was £1.776 billion, which gave them an operating profit of $190.1 million. The number of active customers, however, did increase. They had 26.4 million active customers as of 31st August 2021, compared to 23.4 million customers in 2020. The change was an increase of 13%. They also improved their website's product range. They added 118 brands to their site just this year. Their fulfillment center also increased their UK stock holding capacity to 7 million units. And some great stuff for CSR. They have 80% of ASOS operations powered by renewable energy. They're also on track for US automation by the second half of 2023, whereby they increased 50% of their stock holding to 15.5 million units. They also had an increase in 1.5 million units per week. The current price for ASOS is 2,527 pence, and the analyst rating consensus deems it to be a moderate buy. The analyst price target on ASOS is, however, 4,171.54 pence. This is a 65.08% upside based on 13 Wall Street analysts offering 12-month price targets for ASOS. The TipRanks website traffic chart gives us a fantastic idea of the sort of traction that the ASOS website is getting. The year-over-year traffic has actually increased by 18.45%. October 2021 actually saw 21% less traffic, however, than the same month in the previous year. In the graph, you can see the turquoise line represents the most recent period, and this gray line represents last year's traffic. The TipRanks Smart Score is a 6 in that it is neutral when it comes to outperforming the market. The analyst rating consensus, though, does deem it to be a moderate buy. Blogger opinions are also bullish, but technicals were negative. Insider activity does show that many have bought shares worth £167.3 thousand. Fundamentals, however, show that return on equity is 13.92% for the trailing 12 months. Looking at the stock price, it hasn't reached its previous highs throughout this year. It looks like the stock is relatively undervalued, and many analysts think so. The second stock is Boohoo Group, and its ticker is BOO. Many of you guys might have used Boohoo yourself. I know I have. It's an online fashion retailer. But in the past 12 months, Boohoo has seen its share price drop by 37%. The company came into trouble because of its factory conditions both in the UK and Pakistan. And in May, shareholders were urged to block the reappointment of the company's co-founder. Only 12% of the shareholders did so, and therefore she remained. The current price for Boohoo Group is 174.74 pence, and the analyst rating consensus deems it to be a moderate buy. The analyst price target on Boohoo is 252.76 pence, which is a 44.65% upside based on 7 Wall Street analysts offering 12-month price targets for Boohoo Group. They did show strong 2-year metrics with 73% growth in revenue and 46% in customer numbers. They also doubled their market share in both the US and the UK. So they now have a larger addressable market than ever before. They've actually had the highest structural growth compared to competitors. As you can see, they are here at 73%. They expect their 2022 forward year guidance to show an increase in the reported sales, an increase of 32% compared to 2021. And they have a healthy asset base of $407.4 million, and this is expected to increase to $481.4 million for the first half of 2022 compared to the first half of 2021. Looking at the TipRanks website traffic feature, we can gauge their traction. Year-over-year website traffic to Boohoo.com has decreased by 10.76%. At the start of the year, the drop affected only mobile traffic, with desktop traffic increasing. However, the trend has changed, and all devices are now bringing fewer users to the site. The TipRanks Smart Score is a 6 in that it is neutral when it comes to outperforming the market. Analyst ratings deem it to be a moderate buy, and blogger opinions are bullish, despite technicals being negative. Insider activity shows that many have bought shares worth £29.1 thousand. Fundamentals do show that return on equity was 13.33% for the trailing 12 months. And looking at the share price, it looks relatively low. This could be an attractive entry point for investors ahead of Black Friday. The third stock is TSCO, and its ticker is TSCO. TSCO is UK's largest retailer, and its shares have grown by 25% in the last 12 months. Now, while supermarket giants such as Asda, Sainsbury's, Waitrose, and Morrison's have actually been considered Tesco's biggest competitors, that could change. In June, Ed Retail Insight predicted that by 2025, gross sales on Amazon in the UK will be higher than those of the current market leader, Tesco. However, the interim results show us that reported group sales was 27.331 million, so £27.3 billion. This was an increase of 2.6% compared to the previous year. Operating profit was £1.458 billion, and this was an increase of 40.6% compared to the previous year. Their free cash flow was £1.543 billion as well, and this was an increase of 93.67% compared to £797 million in the previous year. Their revenue was £30.4 billion compared to £28.7 billion in the previous year. This was an increase of 5.9%. The TSCO share price is 280.1 pence, and the analyst rating consensus is a strong buy. Analyst price target is 324.43 pence, a 15.83% upside based on 8 Wall Street analysts offering 12-month price targets for TSCO. Looking at the TipRanks website traffic chart to get an idea of what the traction is like, we can see that the traffic to the TSCO website has grown, and it has grown by 3.42% year to date when compared to last year. However, meanwhile, traffic to Amazon.co.uk has reduced by 2.39% in the same period. The TipRanks Smart Score, however, deems it to be a 9 in that it is very likely to outperform the market. Analyst ratings deem it to be a strong buy, and blogger opinions are bullish. Technicals are also positive, and the fundamentals show that there is a 9.03% return on equity for the trailing 12 months. However, insiders sold shares worth £573.4 thousand. The share price has been shown to be steadily increasing in the past year. So guys, what do you think of these 3 UK e-commerce retailers? Leave your thoughts in the comments below. We love to hear from you guys. And if you made it this far, don't forget to hit that like button and that subscribe button and that bell notification so that you get informed on when TipRanks releases a video. Remember, this is not financial advice. Also, TipRanks has a fantastic Black Friday sale, giving you 30% off the premium plan. The coupon code is linked down below in the description box. I'll see you guys in the next video. Bye!